Hi, and you're watching The Week Ahead with myself, Rowena Harris-Doughty, and head analyst at LCG, Brenda Kelly. Brenda, we're going to get stuck right in. Now, the People's Bank of China, they've been intervening again in the financial markets this week to try and prop up the valuation of the yuan. Are you pricing in further depreciation there?
Well, ultimately what we have seen is a change in the way the FX there is valued, and it's more of a market forces. So they have ultimately seen a certain amount of depreciation, but ultimately today we have seen them actually prop up the yuan. They don't want to see depreciation too much, but it is a good sign. It shows that they are becoming a little bit more normalized, akin to some of the other global currencies. But there are many out there that would feel that some of the ripple effects from this particular move, particularly among some of the emerging markets, central banks, will be problematic. It's not necessarily the start of a currency war, but what you are seeing is a strengthening dollar. You're seeing weaker emerging markets currency like the Brazilian real, the Malaysian ringgit today as well, and this obviously makes their debt loads, which are priced in US dollars, so much harder to pay down. So I think we're going to be looking to this for the time being, but I do feel more stimulus, probably in the form of a rate cut, is more likely in the near term rather than any major devaluation of the yuan.
Had a mixed bag from US retail sales this week. Jobless claims were largely in line with expectations. We've got a flow of US data coming out next week again as well. In terms of dollar drivers, what data is your focus on?
Well, we'll have a look at obviously the housing starts there, which are coming out on the Tuesday, and that has been, fairly decent. But we are expecting to see the pace of permits to actually fall from 1.14 billion to 1 million, rather, should I say, to 1.33 million. So there is a certain amount of softness in the housing market there, and I think the main thing next week will be the FOMC minutes. Certainly the jury is out on whether or not we're going to see a rate hike as early as September. Big division amongst the camps there. It has reduced in terms of its probability to a 40%, judging by short-term interest rates. I would still be in the December camp myself, which is in around the 60-65% level in terms of probability. But getting a detailed view of the collective attitude of some of the FOMC members will be important, and you can probably expect to see a certain amount of choppiness, but people will take their own interpretations from it. And at the moment we are seeing something of a softer US dollar, which to me would suggest that a lot of the hype about a September hike has probably been priced in already.
Moving on to the euro area, if we look at some of the recent hard economic data coming out of the euro area, output data, lower inflation expectations. We had a weaker GDP print from two powerhouses, Germany and France as well. Is there a chance that the ECB may ramp up stimulus in your view?
Well, if by ramping up you mean extending it, I think so, but I wouldn't anticipate there'll be any more sovereign debt buying. I certainly wouldn't expect that, given the rules that are in play there in terms of collateral that's needed by some of the individual member states, that we're going to see any change to the structure of the current programme, but they may extend it. But I'm not expecting that to be announced until a lot later down the line. The ECB are, I think, quite notorious for being more reactive than proactive, and that has been borne out at the moment in terms of where the euro is vis-a-vis the US dollar, and of course the pound as well, because given the data today, the GDP numbers, composite and individual member states, you would have expected that the euro would have declined quite significantly, but it has not, and that to my mind would imply that we're going to have to wait for more data, probably inflation, to find out whether or not the ECB are going to ramp up or indeed create some sort of jawboning in order to talk down the euro.
Okay, I mean, what data or events next week then do you think is going to be driving movement in the euro dollar?
I would certainly be looking at the German PPI, the producer prices, and that's probably going to drop into the negative territory as well, which obviously does have an impact on the CPI as well. Consumer confidence also due out later on in the week. That fell quite dramatically in July to minus 7.1 from 5.6, having stayed flat in June. So, that is one area that I'll be watching for, because it does have an impact on the euro, and with unemployment staying reasonably flat in June for the third consecutive month, then we could actually see a small rebound in consumer confidence, not much, maybe to a -6 print on that one, and that could ultimately, I suppose, underscore the euro and maybe drag down some of the indices, European indices, while it's at it.
Before I move on to the trade idea of the week, is there anything else in particular that you're holding out for?
I think looking at the UK is going to be interesting because at the moment we have seen the pound rising above the 156 level against the US dollar. It's not even all that strong against the euro, so I think that's one area I'd be watching for. I think cable is definitely heading up towards the 157.60, 158. I say definitely with massive amounts of caveats, obviously. But we do have retail sales coming out on Thursday, and they were reasonably disappointing last time. 0.3% month-on-month fall in June, and which is below the consensus for a small rise. So we could see a modest bounce back in July. Equally, we also have CPI from the UK as well. That's more than likely going to remain flat in light of what we're seeing in commodity prices. So my trade of the week at the moment would be above 156. I think cable can actually start to go that bit higher, and I don't anticipate that the dollar is going to see a great deal of strength. Looking at the dollar index at the moment, it's in this flag pattern that refuses to break out. We need to get above 98.35 for it to change my view on cable, which, as I said, I'm targeting 157.70 on that one. Dollar yen is an interesting one. It has hit those highs, 125.50, 125.80, and it is paring back ever so slightly. You would really need to see a breakout through that top level if we are going to get further from here. So at the moment, we're very range bound, but I think above or below 124.10 or thereabouts, I think we could actually see a lower print on that one, maybe down as far as 123.30, but it's very range bound at the moment, so it wouldn't be a high conviction trade.
Okay. All right, Brenda, thank you very much. That's all for today's Week Ahead. Have a lovely weekend. Goodbye for now.